Hi guys, it's Sterling Spectre here. Welcome back to the mining show. Today we've got 4 things to go over. Let's just head right into this first one, which is the Flux Titan node. So if you didn't know, Flux only have 3 nodes right now, and they cost a lot of Flux relative to the price right now. At 1,000, I think 12,000 and 40,000 Flux, depending on which node you want to buy. But they're bringing in this new Titan beta node, which will release on the 20th of July, as it says in this tweet here. The enterprise level infrastructure is powered by Lumento Tech Co., offers a simple way for everyone to participate in building Web3. So as it says here, to participate all you need is 50 Flux for the minimum Titan node collateral on the Zelcore wallet. Once you hold Flux in your Zelcore wallet, you'll be able to lock it into a 3, 6 or 12 month stake. After this time, your collateral will be returned along with your staking rewards. So this is a way that Flux have devised to basically pool together your Flux if you don't have enough for a main node like a Cumulus or a Stratus node. So basically you can pool in your Flux with other users to create a Cumulus node. Then you lock it in for 3, 6 or 12 months depending on how much you want to get back, and then your collateral's returned along with the staking rewards. So this is good. It's coming out in 14 days. I'll probably make a video on that, how to actually put your Flux in through the Zelcore wallet, and the rewards that you can basically expect from the staking. Next thing we have to look at is the Plusar coin. Miners have found a way to make the Plusar coin mineable via GPU. The Plusar team would like to help evaluate the future project. So they're basically asking people, do we hard fork to CPU only again, or move forward with GPUs and CPUs? So I think Rabid Mining, I believe, made a video on this yesterday on how to actually mine it with a GPU. So originally it was only CPU mineable for Plusar coin, and now it's become GPU and CPU mineable. It's looking like here, I haven't shown the results yet, but because I'm not logged into Twitter, but I looked at the results yesterday and there was a big representation for hard forking it to become CPU only again. So it looks like the users of this project actually want it to be CPU mineable, because GPUs do take up a lot of the mining hash rate when these coins become GPU and CPU mineable. So we'll put down the profits from the CPU miners, and the GPU miners will be able to make profits higher than the CPU ones as well. So if you want to mine this coin, there are videos out there, tutorials on how to do it with your GPU. If you just want to get a quick bag in before they hard fork it to CPU, who knows. Hive blockchain's June Bitcoin mining of 278 Bitcoins leaves stock static. Hive blockchain stock is so far unchanged on reports that the company had mined 278 Bitcoin in June. Given that news at Pixel time is only 25 minutes old and the American markets aren't open as of yet, that might be much of a surprise, that the stock price hasn't responded as yet. It's also possible that the excitement surrounding Bitcoin miners had rather declined in the recent months. Given the price performance of Bitcoin, that would be a surprise either. We know that this energy cost Hive has to be able to do in mining. If the calculation required to mine is declining, some miners dropping out of this could be true. Then it could be that costs are declining with revenue as the Bitcoin price falls. It's also possible to think that them both declining in parallel would be a bit too neat of an occurrence. Hive blockchain also has another problem, that it's received notice from the Nasdaq that it's in breach of listing rules. This isn't, given the stock price above $3, the usual breach of minimum pricing rules. Rather, Hive is late in the filing of its form for the F40 for the annual report. This is something that really shouldn't happen and reflects badly on the quality of Hive's management. They insist they'll be filing by the 15th of this month. Hive Blockchain Technologies Limited chart, it just shows the stock price of this Bitcoin mining company. It's perhaps worth noting that Hive Blockchain has already had to do a reverse stock split in consolidation to Brits. In order to maintain the Nasdaq required minimum price level, a second listing problem is only a few months isn't a good look. But of course that's trivial as compared to the longer term prospects of Hive. As with other Bitcoin miners, it's possible to think that despite current troubles, Bitcoin and the wider crypto world really is the future. So miners, as long as they can control their energy costs, are part of that wave. We could also think that current levels are putting sword to the idea that we're nearing the end of the bubble. Clearly it's possible to believe either side of the story. There is a middle road as well, which is that all fast-growing industries and technologies attract less than fiscally gifted. So a regular shakeout of the fast-growing business sector is just that, a shakeout. That those who make mistakes, say lending into someone who then goes bust, is not a killer of the sector, it's just an evolution in action. This, after all, how free market capitalism itself works. Companies go and bust all the time, and yet the system as a whole continues to grow and produce profits. So if we look at this chart here, it just shows the stock is at $4.20. Personally, I believe that this is good because it doesn't show a real reflection of this Bitcoin crash happening, because nobody's really selling this stock and they believe that this company into the future will produce gains over time. The fact that the stock hasn't dropped yet because of the decline in Bitcoin prices is a good show of how the company is producing profits into the future and how the investors feel about the company in general. Lastly, we have crypto mining profitability varies widely based on location. It says here cryptocurrency miners are considered one of the main drivers of the crypto industry, but the latest market downturn has put the profitability at a once lucrative business into a question. Falling crypto prices and rising electricity costs around the world mean that their miners operate on very tight margins, and some might not even be able to be profitable at this time, according to a report from a 911 metallurgist on mining costs. The report estimates how expensive it is to mine the top 3 most popular coins, which are Bitcoin, Ethereum, and Dogecoin. The research considered the average price per kilowatt hour in every country in the world, and then compared it to the energy required to mine every one of these tokens. Subtracting the average market price from the token left researchers with a rough estimate the varying cost of mining around the world. So they don't actually show the whole world on this chart, on this picture, but it says when mining Bitcoin, a difference of a few pennies in the price of electricity per kilowatt hour can be the difference between profit and loss. While Bitcoin is profitable to mine in all the mainland US, in Hawaii the cost of mining 1 Bitcoin amounts to $54,000, making Bitcoin mining unprofitable in the state at current prices. This is probably because energy costs way more in Hawaii just to actually get energy through from the mainland to Hawaii. That's probably why. But if we look at this chart, we can see all these other states that still become profitable. Basically anything under the price of Bitcoin right now would be profitable. So we have like Nebraska, Wyoming, Iowa, all these middle states here. Stuff around the outside, California is not very good. That's probably in the loss for California. Massachusetts is in the loss. Rhode Island, Connecticut. Maryland may be in the loss as well. We have stuff like New York and New Jersey and Michigan. New Hampshire and Maine are probably in the loss, but the rest of them are still profitable. I think the most profitable now is Louisiana with a price of $14,955 per coin. So if the coin price is at 20k per coin, if they mine 1 coin, they get a profit of $5,000 from that. Obviously the margins are smaller as you go through the state and see which ones can actually compete with the price, but for the most part, most of them are still profitable. If we look at the price of Bitcoin right now, it's at $20,376, and if we go back to this chart, anything under that is basically profitable. So we have South Dakota basically being profitable. It says $20,033, so it's kind of making around $100 on this Bitcoin. So anything under that, Louisiana is obviously making $5,000. Washington's up there as well with about 5,000 per coin. Oklahoma's around 5,000 per coin as well. So if you are in Hawaii and you decide to mine a Bitcoin, you'll be in the negative $24,000. Same with Alaska, you'll be in around $20,000 in the minus, and California, you'll be in around $15,000 in the minus. And you can do the calculations for the other states. So overall, most of it is profitable, but in the states, I feel like around the outside of the states are the ones that aren't becoming profitable. So California and then up to New York, New Jersey, New Hampshire, and all those up there in the corner. And obviously Alaska and Hawaii. So that's it for the video, guys. If you did enjoy, please like and subscribe to the channel. All links for articles are in the description below.